As of 9:33 a.m. Eastern Standard Time on this Wednesday morning, December 24, 2025, SMX Security Matters PLC is trading at $148.64 on the NASDAQ, marking a sharp intraday decline of 11.08% right as the opening bell rings for this shortened holiday session. While many investors are looking at their portfolios today through the lens of a quiet Christmas Eve, the volatility in SMX is doing anything but settling down. If you've been tracking the move from $5.90 just a month ago to the recent peaks near $180, you might think you were looking at a typical short squeeze or a speculative bubble common in the small-cap tech space. However, the reality behind this movement is far more complex than a simple retail-driven surge. While the broad market narrative suggests that SMX is riding the coattails of federal policy shifts in the cannabis sector, the hidden driver is actually a quiet consolidation of the company's role as the primary infrastructure for the global gold market's transition into a fully auditable data asset. Most people looking at the SMX ticker on their Fidelity mobile app or tracking price alerts on the Robinhood app assume this is a pure play on regulatory news. It's easy to see why. Just last week, the stock surged over 25% following news of federal executive orders regarding marijuana rescheduling. The market logic was simple. If cannabis becomes federally regulated and insured, the need for seed-to-sale verification becomes a mandate rather than a luxury. But if you look closer at the institutional activity involving entities like UBS Group and Two Sigma Securities, you start to see a different pattern. These players are not just chasing a headline, they are positioning for a world where physical matter must carry its own digital identity. The expectation from the retail crowd is that SMX is a volatile trade to be timed with policy changes. The reality is that SMX is attempting to solve a fundamental flaw in global trade, the fact that once a raw material like gold or plastic enters a refinery, its origin usually disappears into a black hole of paperwork. When you open your Fidelity brokerage account or check your individual brokerage positions, you are likely used to seeing stocks that provide software or hardware. SMX provides something that sits underneath both. Their technology involves embedding submolecular markers directly into the physical structure of materials. This is not a label or a barcode that can be scraped off. It is a permanent part of the material itself. Recently, we have seen this play out in the gold sector through a massive expansion in the Middle East and new alliances with the Bougainville refinery. The market initially reacted with a sell the news dip, dropping the stock over 5% on the day of the announcement, which is exactly why we're seeing this $148 level today. Investors expected an immediate revenue explosion, but the reality of industrial-scale deployment is that it takes time to integrate these markers into live refinery workflows. This gap between the fast-track expectation and the slow-build reality is creating the current price tension. The trading volume we are seeing today is particularly telling. At 164,726 shares early in the session, we are well below the 20-day average of over 3.7 million. This suggests that the massive speculative frenzy of early December is giving way to a period of institutional accumulation, or conversely, a slow bleed as short-term traders exit for the holidays. For those using Interactive Brokers trading tools, the technical setup shows the stock is still technically in a long-term downtrend when compared to the 200-day moving average, which sits much higher due to the extreme reverse split history and prior volatility of this ticker. It's a stark reminder that while the recent 1,900% move from the November lows looks impressive, the stock is fighting against a legacy of heavy dilution and a capital structure that was recently amended. On December 10th, the company amended its equity purchase agreement, increasing its facility by $5 million. This kind of news often scares off retail investors on the Robinhood Investments platform because it signals potential dilution. However, the amendment also removed the requirement for the company to buy cryptocurrency with the proceeds, provided the stock stays above $10. This is a clear signal that management is prioritizing cash for operational growth over treasury speculation. When you are self-investing or seeking investment help, these nuances in the fine print of SEC filings are where the real story lives. The expectation was that SMX was a crypto-linked play, but the reality is that they are pivoting hard toward becoming a pure cap infrastructure provider for commodities. If you look at the landscape of online investing today, platforms like SoFi Invest and the Robinhood app have made it incredibly easy to jump into these high beta names. But high beta often comes with high risk, especially when a company is reporting a net loss of over $11 million as SMX did in its last fiscal quarter. The company's total assets of $38.9 million are balanced against $22.6 million in liabilities, which explains why they are so aggressive with these equity facilities. They are in a race to reach scale before they run out of the capital raised through these agreements. This is the central tension of the SMX story. Can they turn their impressive pilots in cotton, gold, and plastics into recurring revenue fast enough to stop the need for further share issuance? Comment below how many shares of SMX you currently hold and whether you believe the recent gold alliances are a sign of long-term stability or just another short-term pump. Moving into the core business model, SMX operates by selling both the physical markers and the digital platform that reads them. They have created something called the Plastic Cycle Token, which is designed to act as a settlement instrument for verified recycled content. In a world where companies are desperate to prove their sustainability claims to regulators in Europe and the US, having a molecular-level proof of recycled status is worth a lot. This is where the intersection with Fidelity Investments and other major wealth management firms comes in. As more institutional funds move toward ESG-compliant assets, companies that can provide the proof for those compliance reports become essential. SMX isn't just a tech company. They are an insurance policy for the validity of global supply chain claims. Looking at the broader market, we see names like NVIDIA stock and Apple stock grabbing the headlines for their AI and hardware prowess, but SMX is trying to do for the physical world what blockchain tried to do for the digital world: create an immutable record. The difference is that SMX doesn't rely on a ledger alone, they rely on chemistry. This chemical-to-digital link is what they call their integrated value proposition. It allows a piece of gold to be its own passport. Whether it's being traded on a Fidelity trading platform or sitting in a vault, its identity stays with the metal, not the paper trail. This solves the problem of conflict gold or the greenwashing of plastics. Expectations for the first quarter of 2026 are already starting to build. Analysts, though few cover this name formally, are looking for signs that the $111.5 million equity agreement signed earlier this month will be used strategically to expand into the U.S. cannabis market now that federal hurdles are lowering. If they can embed their markers into legal cannabis products, they become the gold standard for federal oversight. But the reality is that competition is heating up. Other traceability firms are looking at this space, and the high fees on platforms like Interactive Brokers platform or the complexity of self-investing in small-cap stocks might keep some larger players on the sidelines until the revenue figures stabilize. The risks here are significant. The history of SMX is one of extreme price swings and frequent capital raises. If the revenue from the DMCC partnership in Dubai doesn't hit the bottom line by mid-2026, the company may have to tap into that $100 million discretionary facility again, which would likely lead to more downward pressure on the share price. Furthermore, the reliance on biometric identity partners like Fingo adds another layer of technical risk. If the integration of biometric data and molecular markers proves too clunky for refinery workers or miners in remote regions, the seamless infrastructure they are promising will face friction. When you are looking at investing sites or using a SoFi robo-advisor, you generally get a balanced, diversified portfolio. But individual brokerage picks like SMX are where you either find the next great infrastructure layer or a cautionary tale of overambition. The expectation of many is that the Schedule III rescheduling of marijuana is the ultimate catalyst, but the reality is that the real value lies in the gold refineries. Gold is a trillion-dollar market that is currently being forced to modernize its compliance standards due to new international regulations. If SMX becomes the standard for that, the current $148, even with today's 11% drop, could look very different in a few years. To wrap this up, the story of SMX is a classic battle between a high-concept technological vision and the harsh realities of corporate finance. We started the morning with a price of $148.64, a reflection of a market that is currently skeptical of the timing of revenue, but intrigued by the scale of the company's partnerships. We have seen the expectation of a speculative cannabis play be challenged by the reality of a deep-tech commodity infrastructure build-out. Whether you are using Robinhood fractional shares to build a small position or managing a larger portfolio through Fidelity